even my family story, right, where dad started off in all of this, he was actually a Dave Ramsey's baby step follower. And so that's why it took him so long to even take action with it, because he's always heard, hey, whole life is terrible. That's a bad investment, right? And they always use that word investment. Your policy is not an investment. In my opinion, it's nothing more than just my glorified savings account, because an investment, in my opinion, it involves risk. It can go up in value and it can go down and lose value. The whole life policy can never go down and lose value. It's an appreciating asset that has a guaranteed interest in there contractually, no matter what's going on in the rest of the economy, right?
This is my time.
Hi, I'm Kyle Stephenson, and you're listening to the Assets and Orthopedics Podcast. In this forum, we hope to educate medical students, residents, physicians, and other high-income professionals on the power of investing, especially in real estate assets and syndications. We want to help providers gain financial intelligence with the hope of earning financial freedom. Please listen and learn so you can spend more time doing what you love with who you love. Enjoy the podcast. Hello and welcome to the Assets and Orthopedics Podcast. This is your host, Kyle Stephenson. I am excited to introduce you all to our next guest, the single millionaire chick herself, Miss Hannah Kesler. How you doing, Hannah?
Oh, I'm so good. Thank you, man. Thanks for having me on.
Good. Yeah, I really appreciate this. I know you're out in Idaho having a good time, so we're blessed and honored to have you.
Yes. And let me tell you, for the listeners listening, y'all got to look it up. Island Park, Idaho. It's the best place in all of the United States for snowmobiling in the winter months. And it's right outside of, so we're like right on the corner of the Montana, Wyoming, Idaho border. So we're about like 40 minutes away from the gates of West Yellowstone. So it's beautiful out there. I would encourage y'all, go and check that out.
Oh, that sounds fantastic. You out there with the whole family?
Whole family, been hanging out. Actually, even my older brother and his kids. So my niece and nephew are here, my sister-in-law, and then my older brother, Sean.
That's awesome. Love that. All right. Well, let me give a quick introduction of you, and then I'm going to let you start us on your journey.
Okay.
So Hannah is a money mentor with the Money Multiplier. She is second generation of the infinite banking concept. And I know you listeners have heard this term over the last couple months with my podcast. So this is a method that Hannah and her father travel all over the country to teach how to recycle, recapture, and keep total control of your hard-earned dollars. Hannah has been mentored herself since a young child about how money really works. She has been implementing the infinite banking concept since she was 18 years old. She's not far from that now. She's been involved in real estate since 20 years of age. And is it still true that your dreams are to build a real estate empire and become a fashion designer?
It is. Okay, so I would love to have like a boutique. I already know I'm going to name the boutique. It's going to be called Aphrodite because growing up, 6th grade, I still remember my history class and learning about all of the Greek mythology, and I loved it. So I was thinking about calling my shop Aphrodite, and then my label, so my middle name is Nicole, so it'd be Hannah Nicole would be the label of it. So those are my aspirations, my dreams one day in the future.
You're on your way, and you got a book coming out. You travel over the country. So yeah, your dreams will become a reality very soon.
Yes.
Hannah calls Daytona Beach, Florida, her home when she's not teaching folks the power of becoming your own banker. She travels around the country in her van with her cat. Just one cat?
I have 2 now. There's a story there why I have 2, but yes.
She is also host of the podcast, The Money Multiplier, which is awesome. I listened to it. And actually, I had surgery today, and I had a rep that was in my cases, and we were talking about it. And literally, he brought up my podcast. The first thing he brought up was the infinite banking concept. And then I told him that you were going to be on my podcast today, and he's like, "Oh, I listen to her podcast all the time." So It's pretty cool. So my followers are starting to follow you now, which is awesome.
Thank you, y'all. Thank you.
And she is author of her recently released book, The Single Millionaire Chick. And she and Chris Nagel are actually coming out with the children's book. Is that correct?
Yes. It's called The Companion. And actually, we're just chit-chatting this morning about it. So it should be released by the end of this month, published copies. Because my book, The Single Millionaire Chick, this one is only available on Kindle because I'm updating and adding things as I go through the course of this year. So very exciting stuff, though.
Good. Yeah, that's great. Yeah. So I listened to your podcast, and somebody mentioned the Beaver Banking book. So I thought, okay, that was good for the kiddos, but I'm excited for your book to come out so we can keep teaching these kiddos about this process.
And let me tell you, Dr. Kyle, I was actually just on a television appearance for a station out in Detroit. And the topic that I was talking about was how to teach your kids about money. Because I just think that's something that we need to start talking about at a very young age. Because for children, it is so much easier to grasp new ideas, learn things. So you always hear that talk, hey, when's the best time to learn a language is when you are very young, right? You got that neuroplasticity still and you're absorbing. It's easier to retain that information. So I think a lot of people need to start teaching the kids, bringing money talk around the kitchen table. So that's why we really came out with the book. And the book is not so much about money exactly. We really use analogies in that book. So then when they get older, like for instance, market volatility in the children's book, it's called Slaying the Dragons. So then when you're older, you know how to go out and slay all those dragons.
Yep. I love it. That's awesome. I can't wait. I mean, my son's all into all that stuff, right? Dinosaurs, dragons. So he's going to have a hell of a time. And actually, I was going to bring this up too, and we'll get all into this, but R. Nelson Nash's book, he talks about Robert Kiyosaki's board game, which I've studied Robert Kiyosaki for a long time. Most people have. And any entrepreneur I know, they're like, oh, the first book I read was Rich Dad, Poor Dad by Robert Kiyosaki. Love that. But the fact that those two had a connection, R. Nelson Nash is talking about Robert Kiyosaki, I thought was awesome. And then just bringing up that cash flow game that he has, I'm trying to get that for my kids in the next year or two. So I think that'll be another way to teach them this concept.
Yes. And even Robert Kiyosaki, in his book, Second Chance, he talks about the infinite banking concept pioneered by R. Nelson Nash. So it's kind of like a full circle there.
Yep, I love that. Well, good. Let's get into it. So the infinite banking concept popularized by R. Nelson Nash. He was your dad's mentor, right? And indirectly your mentor or directly your mentor as well. So yeah, let me just tell you a quick story about how I really got excited about this. If you don't mind, it's going to be quick, but
yes.
So before I had your dad on my podcast, and that was in like November, my podcast has always been about real estate investing, trying to teach physicians, high income earners, professionals on basically how do we become wealthy. And I think, tax benefits of real estate investing and all that are great. Entrepreneurship is great. But there was something that I just kept learning about cash value whole life insurance. And it was always in the back of my mind. And I was like, there's got to be something to this. I'd read a couple of books. I called my dad. My dad passed in December. The months leading up to it, he was very successful in his life. Talked to him and my mom about money and their situation. And they were like, yes, we don't have any insurance. We don't have life insurance. I was like, really? You did not have life insurance? They're like, well, we had term life, but that obviously runs out, right? And so with all that money, he made in his business and investing and this, that, and the other, the money wasn't as much as I thought they would have. And so they were a little nervous about, rehab and stuff like that. So I was just diving in deep and they were helping me, try to figure it out too. And, they're like, well, maybe talk to this guy, see what he says. And nobody really talked much about it. So I just said, all right, I'll forget about it. And then your dad came on my podcast, started talking about it deeper. And I was like, oh my God, that was my first aha moment. Light bulb went off and I was like, the wealthy have to be doing this. And in fact, the Rockefellers, Ray Kroc with McDonald's, right?
Yep. Rothschilds.
Walt Disney, Rothschilds.
Morgans, Stanleys, the Barclays.
Any big name that we know about, basically, right?
Yep.
So that's awesome. And then I think I told you this, first couple of texts I was getting after the podcast was like, it's a scam. Don't do it. And then those are the people now that are talking to me more about it. Like, hey, I like this.
Yes.
Said, yeah. Let's dive in deep. Let's try to find holes, poke holes in it and see if we can. And so far we haven't been able to. So
that's right. Even my family story, right? Where dad started off in all of this, he was actually a Dave Ramsey's baby step follower. And so that's why it took him so long to even take action with it, because he's always heard, hey, whole life is terrible. That's a bad investment, right? And they always use that word investment. Your policy is not an investment. In my opinion, it's nothing more than just my glorified savings account, because an investment, in my opinion, it involves risk. It can go up in value and it can go down and lose value. The whole life policy can never go down and lose value. It's an appreciating asset that has a guaranteed interest in there contractually, no matter what's going on in the rest of the economy, right?
Yeah. So for those who haven't heard the previous episodes, do you mind just getting into the infinite banking? Just give me an elementary explanation of it.
Absolutely. Yeah. So the infinite banking concept, I do encourage everybody, go out there, read Nelson Nash's book, Becoming Your Own Banker, because that's where all of this information comes from. And two, if you got a little ADD like myself, it comes with audio. I do believe it's also available on Audible too. But it's all talking about how you want to be in two businesses in your life. The first business is the one that you're passionate about. It gets you up out of bed every day, supports the lifestyle, supports the family. But the second business that you need to be in is the banking business, the business that finances everything throughout your life. And that's what we're here talking about, is that banking business. So instead of me putting my deposits, because here's the thing, people will go out, you go make your money. I don't care how you make the money. You got to make money to live on this God-given earth we call America. So you go out, you make the money, and then what do we do with it normally? We go and deposit it down at the local bank because, well, that's where they keep the money at. And then what these bankers do is they lend out our money and they make a good living off of our money. So all I'm doing is I'm just going to flip the script. I'm going to make my deposits into my bank, i.e., my whole life insurance policy, with a mutually owned company that pays dividends. Now, it's not just a traditional whole life policy they can go buy off the shelf. It's got to be designed specifically for high immediate cash value. And when I say immediately, my definition of immediately is within 30 days. So when I make that deposit into the policy, my premium deposit, I immediately have cash value in there that I can take out for whatever, whenever I want, because I am now in control of it. To sum it up, like just in like two sentences, it's all about taking back the control of your money, because we do not have control over it when it's in the bank. I mean, y'all, if you really think your money's backed up by the FDIC, we're going to have a come to Jesus meeting right now, because it's not. When you really start getting deeper into the banking system that we have here in America, here's another resource. Go and check out this one book. It's called The Creature of Jekyll Island, and it talks all about the creation of the Federal Reserve System. But we are just not in control. And I think there's, not to go down that road, we don't have to right now, but I think there's maybe a reason why the government doesn't really want their people to be involved in privatized banking. They want us to be consumers of the bank, but that's all that it is. It's just me, instead of keeping my wealth and depositing my money into the conventional bank, I'm making my deposits into my privatized bank or my whole life policy.
Yep, I love that. And are the banks doing that themselves?
And the banks are doing that themselves. Thank you, Dr. Kyle. Y'all, go Google something called BOLI, B-O-L-I, and it stands for Bank-Owned Life Insurance, because these banks, if you ever look at their financials, you will notice underneath their assets right there, number one, they have cash. Number two, cash value life insurance. These banks buy so much in whole life insurance, more than like any of their land and their buildings combined. I mean, honestly, since 2013, banks have even quadrupled their portfolio of how much whole life insurance they actually own. So it's like, okay, are y'all stupid? Or are you guys doing something the rest of us just don't know about? And y'all are probably doing something. So I'm not going to reinvent the wheel. I just want want to mimic and imitate what the elite and the wealthy people are doing.
Yep, absolutely. I love all that. That's fantastic. And so, so R. Nelson Nash's book, Becoming Your Own Banker, your dad and Chris Nagel's book is fantastic. And then I think The And Asset.
Oh, Caleb Williams.
Caleb Williams. Yes, Caleb Williams. And then What Would the Rockefellers Do? I think is a good book as well with Gary Gunderson.
Gary Gunderson, that's right.
Yep. Do you like him?
I do. And actually on that book, What Would the Rockefellers Do? Chris Nagel is my business partner. Y'all should really go and see him on YouTube, TikTok, Instagram. He's always out there posting content. And Nagel is spelled Naugle. But Chris and I, we actually have a foreword in that book, What Would the Rockefellers Do? So y'all, if you reach out to me, send me an email, Hannah spelled the same way as forwards and backwards, Hannah@themoneymultiplier.com. I'll send you a copy of that ebook, What Would the Rockefellers Do? But that's one. But actually, since you brought up Caleb too, I got to tell you this. Just yesterday, the family and I, we actually go to bingo when we're out here every Wednesday. It's called Not Your Grandma's Bingo. It's so fun. And we had some winners last night. Pops came home with $140 and my sister-in-law came home with $290.
Wow.
It was a successful night. But when I was out there, actually, I got a voice memo from Caleb because every year he puts on an event and he's titling it the Life Insurance Summit this year. And he was asking me, hey, there's some companies that you are really in network with, and I really want them to come out and see what we're doing over here with educating the life insurance industry. So you should maybe come out to that, Dr. Kyle. We got to get connected on that.
Let's do it. Yeah, I would love to. Yep. And we'll talk about your event coming up too. So What Would the Rockefellers Do is obviously a book, but I think What Would the Keslers Do maybe good competition for that. So I think what you guys are doing with your dad, your mom and dad, and then you and your brothers is awesome. Can you just give us a quick glimpse into how it works with like your dad being your bank for, your house and stuff like that?
Yes, absolutely. And let me tell you as well, we are out here in Idaho as a family. My immediate family is here right now. And we just yesterday sat down and we had our annual family banking meeting. We do this every single year. We get updates on the assets, the cash, the death benefits that we have in the policies. And just so that everybody's on the same page and we know what's going on. Because here's a quote from Nelson Nash: if you know what's going on, you'll know what to do. So what we were sitting there talking about is, we got all of this death benefit because we didn't start here, right? I mean, Pop started his first policy back in 2008. And up to this point now, I would say there's right around 38 policies within the Kesler family banking system with all of my siblings, my niece and nephew, mom and dad, and et cetera. And what we're doing is we're putting those dollars, keeping the wealth inside of the policies. And when we need something, we borrow from the family bank. So for instance, I got my own policies. I have 7 of my own policies. I'm 25 years old this year. I'll be 26 this year in August. And, if I don't have enough cash value in my policies to go buy something that I'm looking to purchase, I can come to the family bank and ask to borrow money from the family bank. So one example is last November of 23. I just bought my second house. My first house, we bought it through the policies, and I can even start there if you'd like me to, but I want to talk about my condo first. So I wanted more space. My old house, it was a 2-bed, 2-bath, and it was good, but I really needed like a dedicated space for my podcast studio. I was kind of tired of going back and forth from office to podcast. So I wanted another room specifically for the podcast. And I was like, okay, I think I'm ready to move. I've been in this house for about 6 years now, and I'm looking for just a little bit more space. And the purchase price of this property was a little over $950,000. And I love it. It's right on the beach. I get up every day. I like to ride my bike on the beach, kind of get my day started. But I had enough for my down payment on this property, but I didn't have the full 950 to totally just buy it right out in cash. So what I did is I said, "Hey Dad, I need a new place. I'm looking at this house and I think I need to borrow some money from the family bank." And so what we did is we sat down, we drafted up the whole plan, because that's what Dad makes us do. He makes us show him like our, lack of better words, business plan or what we're going to do, right? And he says, "Okay, well, the family bank can loan you the money, and the family bank is going to charge you 13% interest. And in exchange for that, I, the family banker, AKA Brent Kesler, I should say, Brent, he holds the first position or that note on my house. So if I don't pay him my monthly mortgage payments, he is going to come and foreclose on me just like any regular bank would. He's like, "Honey, I love you, but this is business," right? So now I am paying him those monthly mortgage payments. We're keeping the money in the family because the monthly payments that I'm paying him is going to him rather than a banker. But some of y'all may be thinking, well, 13%, why would you do that? I mean, you could go out there right now, get 7, 8, let's call it even 9% for a mortgage if you wanted to. So why Pops charges such a large interest is, number one, he's a lender. All right. He's a lender in the real estate space. He's got borrowers lined up. He could be making 15, 16 to 18% on the money. So he kind of jokes and he says, "Hey, 13% is the family discount rate." But why he charges us all of that interest is because he's tracking that interest. We just talked about it. Actually, I got the up-to-date numbers as of now. As of the current lifetime, Hannah has paid him $208,000 in interest. My older brother, who is also borrowed from the family bank, has paid him $358,000. And my younger brother, who's 23, he's paid him $44,000 in interest up to this point. So right now, if Mom and Dad were to pass away, there's a death benefit bucket of $34 million.
Wow.
And what's going to happen is the interest that we paid him, that's going to get paid out to us first. So Sean and Allie are going to get 358. Hannah's going to get 208. Zach's going to get 44. And then with the remaining bucket of the death benefit, that's going to get divvied up 3 equal ways, and then that will get dispersed out. And y'all, it's tax-free money. This is not taxable money. Death benefit money is tax-free because I want the government out of my hair, right?
Oh, yeah. Yes, I love that. That is fantastic. So you guys have the family meeting, and you obviously go somewhere fun, i.e., Idaho, where you are now, snowmobiling. Do you guys have a family constitution?
We are working on it. Literally, I have it. It's right behind my computer. Printed everything out, and we're going to have it secured by the end of this month.
Okay, good deal. And then do you guys have a team of trustees, basically, that helps with that process and your trusts and all that stuff?
Absolutely. Yeah. We definitely got our people lined up. I will tell you, it's been a long journey to get to this point where we have that good help and good resources, but I finally have it. And if anybody needs those people's information, hey, I'm an open book. I'm like, I just want people to have this information and know how to better their lives, their families' lives, and their financial futures for themselves. But yes, we do.
The thing I love about you and your dad, and probably your entire family, I'm sure your mom is the same way, but you guys are an open book, and you guys are more than happy to, educate, reach out. You guys are just fantastic when it comes to that. You guys are very impactful, very, very giving with your time and resources. And so, yeah, we all appreciate that.
Hey, I'll tell you this. My dad has always taught us kids at a young age. It's is it a Zig Ziglar? It is a Zig Ziglar quote. If you help enough people get what they want, you in return will get what you want. And it has been successful up to this point in my life. So that's my philosophy. Anything in my personal life, my business life, that's the motto I follow.
Yep. I love that. And actually that quote I said in my dad's eulogy because I love it. And I think that's how he is. So I love that Brent and you talk about that.
Yes.
All right. Hey, so let's talk more about infinite banking. And, again, I really strive to understand what the wealthy are doing. And I want my listeners to try to figure out what the wealthy are doing. And it's probably not just putting their money in a 401k and an IRA. I think most physicians and high income professionals, unfortunately, I think we have the mentality of the middle class more than we do the wealthy, because that's all we've known. That's what we were taught. And in medical school, we don't learn anything about finances. Residency gets worse. I mean, it's really, if you don't do your own education, you're not going to figure it out. Most will just hand their money over to a financial advisor, lose the 1% to 2% on that, still put their money in a stock market that they can't beat the S&P 500. And it's, we basically it's a losing game, in my opinion. So why is this better than the 401k and an IRA?
Yeah, good question. Now, I will say, I will exclude those self-directed accounts because I know my folks in the real estate space like to use the self-directed accounts. Maybe they rolled over some old 401ks into self-directed accounts. So I'll exclude those for right now. I will say I don't have any of those personally. I know my older brother doesn't. My younger brother does, honestly, because he's forced to do it as a pilot. NetJets is literally forcing him to put money into a 401k. So that's the only reason that he's doing it. But why I don't even participate in those is because money is worth so much more today than what it will be in the future. We all know inflation, right? And the Fed opening up their back doors and they're going to keep printing out money, right? So instead, I want to use my good dollars today. And if you ever forget about that, your money is always worth more today than in the future. Always think about how many candy bars could I buy 10 years ago for $1 and how many can I buy today for $1? So our dollars are always worth more today. And so I want to use my good dollars. Now, I want to also have accessibility and access to the cash or the capital. And when I lock the money up in like a 401k and IRA, I can't touch that money until I'm age 59 and a half just to avoid the 10% penalty. Y'all, I already told you I'm 25 years old. If I were to put money into a 401k and want to have access to it at age 59 and a half, that's 34 years in the future. Are you kidding me? You know how much I could be doing in 34 years if I have access to the capital now? So I want access to it. That's why I'm not a huge fan of the 401ks, because if I don't have access to it, or if I want to have access to it, I got to pay the 10% penalty. And even after that, after my age 59 and a half, okay, there's no penalty, but I'm still going to get taxed on the money. I'm just kicking the can down the street with the taxes that I gotta pay. And when I pay tax on my money, I only want to pay tax one time only at the lowest rate possible, and then get that money into a tax-free environment where now it's growing tax-free. And that's the policy, because now it's in there growing tax-free. I have access to the cash and I can use it for whatever I want. So I'll be real. That's why I don't love a self-directed IRA, because there's limits to what I can use the money for. My policy, if I really wanted to, I could go down to the 7-Eleven around the corner and buy a pack of chewing gum with my policy money if I really wanted to, So it's having the control, the access to the cash, and not in the taxes on it, right? I just don't want to be in the future having to lose out on all of this money that's in my 401k because I'm getting hit with all of those taxes that are coming into it.
Yep, I love that. And even a Roth IRA, you can say, all right, that's post-tax income, right? So you're never going to be taxed on that money again, but there's limits to it. Right now, it's like $7,000 that you can put into it. You have to have, lower than a certain income, or you got to do a backdoor Roth. and you still can't touch that money until retirement, 59 and a half. So recently, because ever since I had your dad on, Devin Burr, I listen to your podcast all the time. I read the books. I'm really just trying to figure out the best message for physicians. And I think infinite banking combined with real estate investing is such a powerful tool. And we'll get into real estate and what you do. My brand is called Legacy RX. And I have a conference coming up October 24th and 25th, Legacy RX conference. Your dad is speaking. He said he's bringing you along. So
I'll be there.
All right. Let's go.
Indianapolis. I love Indy.
Yes. So I created these 4 L's. These are, pretty standard words, but bringing them together, I think combines infinite banking with real estate investing. So this formula that I came up with, liquidity, being your own bank, you get liquidity. With investing in real estate investing in 401ks, IRAs, you get no liquidity. So liquidity, leverage, liberation, and legacy.
You need a t-shirt. You need
cool?
to merch with that. I like that.
That's pretty cool. Yeah. So I'm sticking to it.
Hey, I want to make one more comment too, especially because you know what some people will say, like especially when they're like talking with their financial advisors and maybe they bring this concept to them, or maybe they ask questions of, why am I putting money into this 401k, IRA or whatnot? Most of the time the financial advisor will come back to them and say, hey, Mary and John Smith, it's okay. Go ahead, take the tax deductions right now or the tax benefits now, because then in the future, when you start to pull money out of your 401k, it's going to be okay because you're not going to be making as much money later on down the road. I'm thinking to myself, I'm like, oh my gosh, what are you talking about? I'm working all of these years. I should be making the same amount, if not more money in those later years of my life. I just think it's totally backwards thinking.
That's the scarcity mindset as opposed to the abundance mindset.
Yes.
Big difference. And that's when you change the mindset to the wealthy. I mean, mindset really is the first part of it, right? When it comes to being wealthy. So, all right, you can use this infinite banking for buying a car, buying a house if you've built up enough cash value. What are some other uses? Obviously, we'll get into real estate investing. I want to talk about that. But what about, I guess, generally speaking, you either buy consumer debt with it, which is buying your car, your house, student loans you could do it with, anything to minimize interest going outside of your own bank, right?
Yep.
So consumer debt is one, and then debt in real estate or being a private lender is another way to do it.
Yes.
Are those pretty much the two general ways to use the infinite banking?
This is why Nelson calls it the infinite banking concept. There's infinite things that you can do. Taxes. I paid my property taxes just in October on this new condo. Oh my goodness, I did not think that property tax was going to be that high, but whoa. And so I took a loan from my policy to then go pay the property tax bill to Volusia County. And so now all I'm doing is I like to call it saving back up if I use it for like a large expense like that, or like a vacation. Say I want to go to Greece. Oh, wait, hold on, Dr. Khaled. I don't even think I told you. Next month, yo girl's going to Thailand. And I'm meeting one of my best girlfriends out there. She's actually over there doing her yoga certificate training right now to be a yoga teacher. But that trip, it was close to about in between like $10,000 to $15,000 because yes, I was a little bougie and I upgraded myself on the flights because it's like a 16-hour flight. You know what I mean?
Good for you. First class. Once you go first class, you can't go back, right?
Yes. And that's the thing about this too. It's the freedom to have the choices. I have the freedom to choose, hey, do I want to sit in back or do I want to sit in first class? I will do that. Like next week when I go to San Diego and I teach down there at another event, I just bought myself coach tickets because I'm like, I don't really need it. I'm over here in Idaho. It's only an hour flight. So let's just buy the coach ticket. I don't need to spend all that money. So it's the freedom to have those choices. But Anywho, so vacations, right? Vacations are things that I think everybody should be going on every single year. And for my people who are like in the W-2 world or not taking your vacations, y'all, you only have this one life to live. Take the vacation, take some time out, spend the time with your family. But when I use it for those large expenses, vacations, taxes, etc., I look at me paying myself back almost as I'm saving back up for next year. Because I know next year, in this coming year, October of 25, I'm going to get hit with my property tax bill again. I know in 2026, I want to go to Greece. So I know there's going to be another vacation coming up. So I just save back up inside of my policies, prepping for that next expense or bill.
Yep. So with that being said, then do you make monthly payments, recurring monthly payments with interest back to yourself for what, a year or 3 to 5 years?
Yes. And this is the freedom of you being your own banker, because loans on your policy, like if you ever call into the insurance company and you say, hey, I want to take out a loan of $10,000. They never ask you what you're using the money for, when you're going to pay it back, or how you're going to pay it back. Because honestly, the insurance company just does not care. They know in the end, they're going to get made whole again, because a loan on the policy is nothing more than a prepayment of the death benefit. So any outstanding loans at the time of my passing will just get subtracted from that death benefit. So kind of forgot where I was going with that thought, but
being your own banker and being able to pay it back as you please.
Yes, as you please. So because I am my own banker, I get to determine how much interest I want to charge myself. Heck, you could be the type of person who are like, I'm too cool for that. I don't need to charge myself interest. That's all right. That's up to you. But I do think that you need to treat your money just how you treat the bank's money. Play that honest banker with yourself. But the cool thing here, though, is that you are in control. You get to determine the interest rates. How frequently do you want to pay yourself back? Is it monthly? Is it quarterly? How long do you want this loan outstanding for? A good resource that I really like to use is bankrate.com, and they have loan calculators on there, and that's how I know how much to pay myself back. So, quick example for like the tax bill, for instance, it told me, I put in there that, all right, I want to pay this back in 12 months or 1 year. And Hannah, the Bank of Hannah, charges herself 10% interest. That's just what I do. Because the more aggressive I am on the interest, it just means more money that's coming back in my pockets anyways. So when I did that, I clicked on the calculate button on bankrate.com, their loan calculators, and it told me that, all right, you should be paying yourself back $940 every month. So what I do is I take that $940, send it back to my policy. And with some of these insurance companies, you can actually set up a reoccurring loan repayment, and they will just automatically draft it inside of the policy from your bank account.
Yep. Love that. Does it ever make sense to pay for something and then just immediately go back and pay back your policy without the recurring payments, like with interest?
Yeah, you could, I guess.
It seems like it's probably a waste, because then you're just adding interest to yourself.
Here's a rule that I like to use. If I have money that's sitting in my bank account and I have a use for the money and I'm going to be using it within 60 to 90 days, I don't pay it back to my policy. I will keep it within like my holding cell. I have a segregated checking account at my local bank. It's separate from my main account of where all of my active income gets paid into. So I'll hold it there in that segregated checking account until it's ready to get deployed again. So 60 to 90 days is kind of that guideline of whether I move the money back in, take it out.
Okay, good deal. All right, let's get into real estate investing. I think this is a powerful combination. Again, as I just mentioned, IBC with real estate investing. And so I've been in a lot of equity deals, syndications, where, you put money in and then you get percentage, quarterly distributions. And then in 3 to 5 years, you sell the property and you get equity. Is that an okay way to use your policy, or is it better just to be private lender, get your 12 to 15% So you make your spread and get your interest payments a month, every month. What do you think about that?
Honestly, both ways are totally valid because it just depends on you, your goals, and what you're looking to do. For instance, I got Sandra Fry, who's on my team. She's very big into syndications. And the reason she's into it is because she wants the depreciation, those tax benefits on that investment, the syndication realm. Me personally, I've never done a syndication before. That's just not what I'm into right now. I'd love to learn. I'd love to evolve. I actually just said this when we met in Utah for our Money Multiplier experience event. But one of my goals this year is I really want to acquire more assets for myself because I'm a whiz when it comes to lending. I know how to do that, but I really want to start accumulating more tangible assets, real estate. So it's really based on what that person invest in the things that you like, know, and understand. I always say that. So if you are into the syndications, maybe you like funds, maybe you are a gold and silver person, maybe you are into the stock market. I got people who love to do day trading and they will use their policy cash values to go and do it. So just understand, your guidelines for yourself. For instance, like on my lending side, I do not take any less than the first position on that property because dad has always taught me if you're not first, you're last. And that's the only time that he's ever lost money in a deal is when he's taken that second position. So just follow your guidelines. But the thing here is that we're using the policy cash values because now we're double dipping on the dollar. I'm now forever and always earning that guaranteed interest in my policy, and I'm making interest over here in the investment deal.
That is the coolest part of it.
I agree.
Good. And so just real quick on private lending, how do you come up with the interest rate? Is it just a discussion between you and the operator, or do you have your own rate?
Yeah, I kind of have my own rate. Going rates, I mean, it's been anywhere from like 12 to 15% over here on the private money side. Why? Some people may be thinking, well, hey, why would people be paying so much interest for that? Well, I don't make you go through like a prostate exam like a bank would to ask to borrow money from them. You know what I mean? So I'm quick. I can close it quick. And that's what people want. They want it quick. They want it done, and they want it done on time when they need it, because a lot of these investors, they're moving fast. They need the money now because they got a fix and flip that they're doing, or maybe they got some rehabs, or I don't know what they're doing over there. Most of the time it's fix and flips. So my rates that I really set with myself, I'm asking like the community and just people that I talk to within the lending community, hey, what are you guys charging right now? What are you guys doing? And that's kind of how I set them. And, depending on how much it is, right? Maybe interest rate could be a little higher, maybe it could be a little lower, but I would say right now going rates 12 to 15%. I even got some people who will go all the way up to 18%.
Okay. Wow, that's great. All right. So moving to your book, let's hear what you got going on with this book that you said just came out, right?
In January.
Ebook came out, but you're still working on it a little bit.
Mm-hmm. Mm-hmm. And I'll tell you, with the book, the main reason the book came out is because of a lot of these television appearances. I've been kind of getting into the whole realm of TV and just doing a lot more awareness. Because the thing is that I just want people to know about whole life insurance. And in order for them to start to learn about whole life insurance, we got to start bringing it up in a conversation, right? I always say that life insurance is my love language, so I always bring it up. And when you start to normalize that talk, now it becomes a normal way of living when people are having conversations. Because let's be real, whole life insurance, it gets a very negative rep, especially when you got these big gurus out there who are saying, don't do that, don't do that. But I don't understand why it gets such a negative reputation when it offers such incredible value. So the book really came out because it really is giving me that head up for these television appearances to talk about whole life. And that's why I said, hey, I'm going to be adding more to this over the course of this coming year. But it gets into my story because that's one thing. I was not the greatest teenager. You did not want to have me as your teenage daughter growing up. I'll tell you right now. I'm still apologizing to my parents to this day for all the crap that I put them through. But, I struggled. I struggled with drug addiction. I struggled with almost being homeless because I think a lot of people see me and they see, oh, you're Brent Kesler's daughter. You were just handed all of this. You've always had this silver spoon and this one hand up. No, when you turn 18 in this household, Pops comes to you and says, hey, it is no longer my responsibility to keep you alive anymore. So good luck. And so we got cut off, and it was my responsibility to go and support myself. And doing that, I struggled. I had a lot of struggles, but luckily I came around the other side, and it just made me a better person that I am today. And I just need to really share more of that story because I think it really connects with people. Sometimes I think people, they just feel like they don't deserve it. They feel like they don't deserve the wealth or the freedom or being a business owner. And I'm telling y'all, you guys, this is your one life to live. Create those opportunities for yourself because, hey, we only got this one life until Jesus is calling us home.
That's awesome. Good work. We could just end right there. Yeah, we will. So let's do one more question, and then I just do 4 quick questions to end it. But what is your biggest advice for my listeners? Most of them, like I said, physicians, high-income professionals, of all different jobs. But what is your advice for most people?
I would say financial side, track your stats. I know you guys hear that, but do you really do it? No. All right. So track your stats on your monthly cash flow. Really understand how much am I bringing in on a monthly basis. It can be business and it can be personal. How I do this in my personal life is I use this app called Rocket Money. Love them. And then on my business side, I actually hired a bookkeeper not too long ago, honestly, like probably 5 or so months ago. Game changer. Spend the extra dollars, get yourself a bookkeeper, I'm telling you. But track your stats and track it on a monthly basis because Nelson says, if you know what's going on, you'll know what to do. Sometimes people think if they still have checks left on the counter that there's still money in the bank. No, guys, you need to really track your stats. But here's more importantly, track to see how much that you're keeping. It doesn't matter how much you make. It only matters how much you keep. And the keeping dollars, that's the money that should start flowing into the policy, my opinion.
I love that. Robert Kiyosaki has been saying that. You guys say it. R. Nelson Nash has said it. It's not how much money you make. It's how much you keep. And it took me a long time. Honestly, I just felt like it was the tax game he was talking about. I was like, all right, how do I minimize my taxes? And then you realize, you guys talk about this. Tony Robbins mentions this in his book, Money Master the Game, I believe, where he says, like, on average, people pay 50% in taxes. All right. So half your money's already gone of taxes. Of what's left, 35% of that goes towards interest. Mm-hmm. Interest payments, car payments, student loans, mortgage, whatever. And so then the rest, you're left to live, lifestyle expenses, and to invest. And then you're taking those investments and you're trying to make up for all that money you lost in taxes and interest, right? So it's like, why not just keep the money that you made and you'll be much better off?
To that point too, that's the biggest thing that a lot of people get misinformed or a misconception of. Banks will like push out these low rates, advertising. They try to advertise their low rates, right? I can't think of the word right now, but it's not the interest rate. It's the volume of the interest that's killing us. I could have a very good rate of a 3-4% mortgage, but if you look at your monthly statement that comes in the mail from the mortgage company, you got that principal's portion and then you got the interest portion. That interest portion is not 3%. It's right. A lot higher than that. So in these early years, a lot of the money that we're paying on these items that we bank finance, the majority of it is going towards the interest payment. So it's not the rate that's killing y'all. It's the volume of the interest that we're sending out the door to the third-party people.
It's crazy. 80% of your interest on a mortgage is paid in the first 7 years.
Yeah.
And then you refinance and you're paying the 80% again the first 7 years. Then you refinance again and it just starts over.
Hey, have you gone down the whole rabbit hole of velocity banking?
So I have a meeting with Anthony in the next week.
Cool.
Yep. Because we're building a house right now. So I actually talked to him on the phone. And so first lien HELOC. Yep. And when I first had a conversation with somebody about that would have been probably 3 months ago. And it was for my investment properties. And the way he explained it, I was like, that sounds just like infinite banking.
That's it.
I talked to you about it and you're like, yeah, velocity banking. I'm like, holy cow.
Yes. Yeah. Because that's another way that people are just paying down their home mortgages in a fraction of the time instead of 30 years.
Yes. What I'm learning is that there's so much that I don't know. And I'm not the only one. There's a ton of people that are reaching out to me like, oh, man, I had no idea. So that's why this podcast and having you on is your wealth of knowledge at 20-something years young. All right. 4 final questions, and then we'll finish up here soon. What book are you reading right now?
Ooh, actually right now, The Lost Bookshop by Evie Woods, and then Start With Why, Simon Sinek. So at the same time, I read 2 books at a time. One is a fiction, one is a nonfiction. So I read my nonfiction, and then when I get bored, I switch it over to the fiction.
Yep, I love that. That's a great way to do it.
Yes.
What advice would you give to your 25-year-old self? Okay, no. What advice would you give to your 18-year-old self?
18-year-old self. I was going to say, stop hanging around these fools. Okay, they say it all the time, and I know it's kind of cheesy at this point, but your network is your net worth. It is so true. And I just got caught up with hanging out with all of these people that were just not going anywhere in their lives. And I didn't see that. I was trying to be cool, be there, just live my life. But when you really start to have the goals set for yourself, you'll start to notice that people start to drop off because they're not in line with those goals. So I would say to my 18-year-old self, just be cautious or courteous of who you are spending your time with, because you do become the average of the top 5 people you hang around with.
Yep. I love that. And that's great advice for anybody, any age. I'm 40 and I'm still figuring that out. So what is your definition of wealth? This would be a good one.
My definition of wealth is honestly being able to leave this planet better than what I found it. I would say that's number 1. But then number 2, it's not having to worry. I can go and make whatever purchase that I want. Have you ever heard that Ariana Grande song? I want it. I got it. I want it. It's that, being able just to do whatever I want because I have that freedom, that financial freedom of the choices that I can make for myself. But then it gets into another conversation. This is kind of something that we talked at the family banking meeting with my niece and nephew. Hopefully they can't hear me right now. But even though you can afford it, do you really need it? There's differences between a need and a want.
Mm-hmm. Yep. Great stuff. All right. Last question. Proverbs 11:25 states, a generous person will prosper. Whoever refreshes others will be refreshed. If you could make a big impact by giving back, what would you or have you focused on?
Now, I will say I actually do have a foundation. It's called the Speaking Life Foundation. And I want to do more with it, but what I've been doing right now is I've actually been lending out of my foundation, making dollars over there, and then at the end of the year, I donate all of that money to my favorite charitable organization.
That's great.
I want to do more with that foundation. I haven't figured out my exact passion quite yet. If it is, kids and maybe drug addictions, or maybe actually what I have been thinking about recently, because I have a good girlfriend that's getting into this, but the whole helping the prisoners when they get out of jail. It's hard for them. And allowing them to have sustainable housing and getting clean and finding a good job so that they can flip it around. Because I get it. If I did not stop my crap when I was so young, I don't know what I would be doing now. And maybe my butt would be there with them. And that's not cool. So that's really my main focus is that I'm trying to figure out what do I really want to build this foundation around. So in the meantime, what I do is I lend out of it and then I just donate to these various charitable organizations.
That's so cool. Yeah, I heard your last podcast with the home. It wasn't homeschool. It was the schooling up in Michigan.
Mm-hmm.
And I thought that was brilliant.
Oh, I know. Because me too. I don't know if I'll ever send my kids to public school. Is that bad to say?
We're doing, my kid's only 4, but we're doing like a hybrid homeschool with our local Christian church. And they're actually moving toward where we're building. So it works out perfectly. But it's 3 days a week until he's a senior, like until they're seniors. And they only go 3 days a week. And a lot of it is, get your schoolwork done while you're at school. They embody the, spend time with your family. Like they don't start until 9 a.m. so you can have breakfast with your family. It's just very family oriented. They want you to take vacation. They want you to do homeschooling. They want you to travel, go see museums, go see parks, go do all these things. And they don't ding you for it. You just consider it a school day as long as you're learning.
That's awesome.
Yep. All right. Thank you for coming on the show. We appreciate you. I think that your dad, Brent Kesler, he's the man that, started all this, the Money Multiplier. But you and him and Chris Noggle and Devin Burr and Stephen Nagy and the whole team, Money Multiplier team, I think you guys are all doing an awesome job getting this out there and educating people. So where can people find you? Tell us about your podcast and, what events you have coming up.
Absolutely. Yeah. So in a few short weeks, March 1st and March 2nd, Tampa, Florida. If you go to moneygamelive.com, Money Game, G-A-M-E. Honestly, I started this event just because it was all around that Tony Robbins book, Mastering the Money Game. I said, y'all, we need to get people in this room so that when folks leave, they know how to master the money game. They have the systems, the mindsets, the mentors, so that they know how to go put their little green men to work. So that's coming up. And hey, if you're listening to this, I got some tickets to give away. I will give away some tickets. Just reach out to me, Hannah@themoneymultiplier.com. My gift to y'all and to Dr. Kyle for allowing me to be here. But I got my podcast show, The Money Multiplier Podcast. And you can learn more about me too, just on my website, HannahKesler.com. Hannah spelled the same ways forwards and backwards, Kesler with one S.
That's awesome. You're killing it. We love it. Thank you so much for coming on.
Thank you, man. I'll see you soon.
This is my time. I'm on the rise. Can't hold me down.
Thank you for listening. If you found value in today's podcast, please leave a review so our community can continue to grow. If you would like to stay connected or receive a copy of your free investing ebook, please go to www.sharpinvestmentsllc.com, and that's sharp with a P as in professional. This is not financial or tax advice. Please consult with your financial advisor or CPA.